One of the worst days for U.S. stocks this year as the Federal Reserve sends shockwaves across Wall Street, hinting at fewer rate cuts in 2025. So, what caused this tumble? And how are global markets reacting? Let's break it down. Welcome to Insightful Times. I'm Steve, and today we're diving into the Federal Reserve's latest decision that sent the U.S. stock market reeling. The S&P 500, Dow Jones, and Nasdaq all took major hits. So what happened? And what does it mean for investors and the economy? Federal Reserve announced a quarter-point rate cut, bringing the key interest rate down to 4.25%, marking the third cut this year. However, the bigger story is the Fed signaling fewer rate cuts in 2025, only 2 cuts instead of 4 that were projected earlier this year. Fed Chair Jerome Powell emphasized caution, describing the approach as driving on a foggy night. This measured tone comes amid 1. Rising inflation concerns. 2. Strong job market performance. 3. Economic uncertainties, including policies of a new administration under President-elect Donald Trump, which could stoke inflation further through tariffs and spending. Reduced expectations rattled investors. The S&P 500 fell 2.9%, marking one of its worst days this year. The Dow Jones dropped by 1,123 points, 2.6%. Nasdaq Composite slid by 3.6%. Treasury yields surged in response, squeezing stocks further. The 10-year Treasury yield climbed to 4.5%, while the 2-year yield rose to 4.35%. Companies highly sensitive to interest rates, like small-cap stocks, were hit the hardest. The Russell 2000 index plunged 4.4%. Tech giants also felt the heat. Nvidia, which led much of the recent market rally, continued its decline, dropping another 1.1%. International markets showed mixed reactions. London's FTSE 100 edged up slightly as inflation hit an 8-month high at 2.6%. In Japan, the Nikkei 225 slipped 0.7% ahead of the Bank of Japan's upcoming policy decision. Jerome Powell reiterated that future cuts depend on inflation trends and broader economic data, adding, "When the path is uncertain, you go a little slower." For now, investors are watching closely as the Fed adjusts its strategy. Higher rates could continue to squeeze borrowing, corporate profits, and ultimately the markets, leading to more volatility in the months ahead. Fed's cautious approach might cool the adrenaline that boosted markets earlier this year. But will it stabilize inflation without stalling the economy? That's the big question. Stay tuned here at Insightful Times for more updates. I'm Steve. Thank you for watching, and we'll see you next time.